Good evening. This is the Elliott wave update for the S&P 500 for Monday, December 20th, 2021. The S&P continued to fall in line with current analysis. So let's just do a quick recap and then then go over what took place today. We remain in a minor C wave down, and that will then complete what I will label as an intermediate degree A wave. Again, as I described in yesterday's update, the S&P is now in a more involved, longer-term corrective phase, which is beginning with a series of three waves down, which will be labeled as an intermediate degree A wave. Then we'll likely get that B wave, which will be three waves up, and that would be an intermediate B wave. And then we'll get the C wave down, and that then will be labeled as primary wave A. So again, the building block scenario that I continue to use, which is how Elliott wave is constructed and builds these larger pictures. So if indeed this level, which I'd still consider the orthodox high for the S&P at 4740, that it completed minor 5, intermediate 5, primary 5, cycle 5, and super cycle wave 3. So we've got a lot of degrees to correct on the way down, and they will build as we finish this first three legs down on a minor degree. It's going to complete the A wave of an intermediate degree. As we complete three waves down for an intermediate degree, that will finish the first leg down of the primary degree, which will be a primary A wave, and et cetera, as we move up. Getting into where we are within this initial minor wave C down, we did manage to, again, create an additional new low for these sequences at 45.26, market rallied, then we came back down, put in an additional low at 45.20, as we continue to work our way back down and eventually break below 44.92. Again, remember that 44.92 is the level that I would like to see broken to seal the deal in terms of upside being negated for right now, and that we will continue lower to complete the minor wave C and in turn the intermediate degree wave A. Within this C wave, it will consist of 5 waves of minute degree. We have minute 1, minute 2. So then I'm looking for the start of a minute third wave. Third waves are normally the longest and the strongest within an impulse sequence, which this is. So it's going to be 5 waves down. Minute 3 should and most often will be the longest and the strongest wave out of the 5-wave sequence. And so, and it most often subdivides. So if I go from that point, that here at 46.57 is where wave 2 completed. From there, I get 1, 2, 3, 4, 5. So that just completes sub-minute wave 1 of 3. Again, remember there's going to be 5. So this is just wave 1 of 3. So we're in this wave 2 of 3 move. And let's just put on some retracements to see where or what potential wave 2 might have. And right now, we can see that the market actually is already up to the 0.382 level, which would be a minimum for a wave 2. And that came in at 45.71. Continued rally, since what I'd be looking for is a 3-wave move up. And maybe I may have, it might be in the C wave. So if I'm here and this is A, B, and then we're starting to move up in a C wave, what can we expect? Well, likely that it's going to come up above 45.71 and likely get itself up to this next level, which is the 50% level, which is 45.87. So 45.85 to 45.90, sure. That all fits very cleanly, and it sits then right below the hourly 50 moving average. All fits all works out pretty cleanly. If that's exactly what the market does and then turn, then it's from my mouth to God's ears to get this done, because the markets tend to not actually perform to the letter, to the T or the dot on the I. So we can always expect a little bit of overthrow, and that might bring us back towards that 4,600 level, which is a comfort zone for the S&P. We spent a great deal of time above it, and that was being lauded or thought of as strong support for a continuation of the rally. So that same concept is going to run across traders' minds. If we can break significantly above 4,600, that declines over. We're back on the bull trail, and now we're going to continue to march higher as the Santa rally pulls through. That's the nature of a second wave. It also can have a characteristic that it's going to fool you, as if whatever was happening prior, it's done, and we're resuming the previous trend. And then suddenly it stops and it turns. So right now, I'm going to be looking for 45.75 to 45.90 to likely contain, and then again turn the market lower as this sub-minute wave 2 of 3 completes. Now, if this is the correct count, wave 1, wave 2, what comes next is wave 3. We're already in a minute third, so it's going to be a 3 of 3 move. And that within that is that point of recognition. In this case, I would say that point of recognition is like, oh, we are going to go down. We are going to break 4,500. We are going further down. The selling is for real. And that would give additional confirmation of that. And so that's kind of what that point of recognition will do, because what I would be expecting, if indeed the market starts to turn and start to head lower, I'm looking for the acceleration to pick up. And that is going to also follow through with that increase in volatility. And it's going to start to break back below these levels. So I would think it's going to break back below this one at 45.51, 45.48 down to 45, and it's going to break below 45.19, which was today's low, and it's going to start heading to 44.95. Remember, if I go out to the 4-hour chart, that 44.92, there you go, is this low right there. And if it breaks that low, then the upside scenarios that could continue to be played out, that the market will return and make additional new highs above 47.43. If it breaks 44.92, it basically negates that for now. And then we should continue lower and get into our zones where we feel that the C wave has a chance of completing. And that first level is right down in here. And then we have continued support down here at the low of the intermediate fourth wave. And that's going to be right, come on, right there at, she's so picky, 42.68 or 42.69. Breaks below that, then, but to be honest with you, I actually would be looking for that to hold and to complete the C wave. So that would complete the first ABC down. We'd put a intermediate degree A there, and we're looking for an intermediate degree B wave up. So that would fit, and that's a pretty clean scenario. So the quicker we get down there, complete it, the quicker we get into that next rally phase. And that could really just, the decline could carry us through this week and the beginning of next week. So towards the end of the year, we continue to see adjustments made in portfolios. And then at the start of the new year, it's new year, new money, et cetera, et cetera. And so to have a B wave fits perfectly. The whole characteristics of a B wave, the whole characteristics of how I believe traders would come back and embrace that, I think it could be very dynamic. In any case, I do believe that the trading continues to hold strong. So one more I want to go over here today, and that's going to be our moving averages, because the S&P did put in some interesting dips today. So first off, we came down on Friday and we touched, I got to get rid of some of this support here. Let's start by doing that. There we go. It came down and touched the 50-day moving average and then closed well above it. Then today it came down, it broke below it. It actually broke quite a bit below it, but it came back and still closed below that 50-day moving average. That gives us now another signal of weakness in the market, which is an additional reason why I start to feel more strongly that we're not done, that we continue to break down. Now, should the ES get back above that 50, which is at 45.88, and close above it, it negates the downside for now and reignites upside hopes. That's how the moving averages will work. But a continued lower and another close below sets the stage for us to get down into these levels, which is where I'm thinking the C wave will complete. That's where I'm going to leave it for today. Our next update will be on Tuesday, the 21st.